Managing cash flow. Wow, what a topic. Again, everybody, welcome back. Welcome to the Black Enterprise Entrepreneur Summit. My name is Ramon Ray, founder of SmartHustle.com, and I am honored to be here today to talk about this very important topic. And ironically, even though I've started 4 companies, sold 2 companies, cash flow, and numbers, as at least 1 or 2 of the panelists know, it's a difficult part for me. So I'm really excited to answer the questions, and I feel special. I get to learn while talking to these amazing entrepreneurs. First up, Haridat. Maya, welcome. How are you today?
Doing well. Thank you, Ramon.
Good. I'm glad you're here. And everybody give me 2 seconds. I just want to tell you the amazing person we have in Maya. Maya Haridat is an award-winning entrepreneur, author, and founder of the New Designs for Life training company. So you definitely want to check her out. Whether she's training social and business entrepreneurs how to run successful enterprises that educate, empower, and support others, as CEO of New Designs for Life training, helping underengaged corporate employees tap into the power of entrepreneurship. Maya, you'll have to talk to us about that. Or coaching women to become more independent. Maya capitalizes transformation. And that word's so important, transformation. She specializes in teaching people how to tackle the big question marks in their life to get the most important answers needed to experience success. And you can find out all about Maya at mayaharidat.com. Again, Maya, happy to have you with us. Our next expert guest today is Trisha M Tate, who's the founder and principal of The Art of Money Matters. Trisha, welcome. How are you? Thanks for being here with us.
I'm good. How are you, Ramon?
I'm a blessed man and fantastic. So Trisha's amazing as well. I've had the privilege to work with her in the past a few times. The Art of Money Matters, an outsourced CFO firm that offers growth-minded small to mid-sized businesses about $1 million plus the financial expertise and big picture perspective that help drive profitability, improve cash flow, assess the financial health of their business, uncover opportunities to increase profit margin. That's so important. And I hope, Trisha, we touch on that today and develop tactics to fuel and fund growth. Ms. Tate is an advocate, speaker, and driving force behind support for women-owned businesses through an initiative called Power Her Financials. Its mission is to educate, engage, and empower women business owners and executives around their business financials so they grow to $1 million and plus or more in business. And for more information on Tricia and all that she's doing, check out powerherfinancials.com. With that, Maya and Tricia, let's dive right into the discussion at hand, the aspect of managing cash flow and more. And I think my first question, I'm going to turn to you, Maya. And I do want to let the BE attendees know, please use the power of Twitter. Our hashtag is BEsummit, BEsummit. So we definitely want you to tweet all the wisdom and insight that you're getting today. Take pictures and make sure you link back to Black Enterprise so we can share this knowledge today. So Maya, first and most importantly to you, Maya, help us understand what are the things you're telling your clients, telling people like me who may not be so financially savvy. Why is cash flow management important? And to you, what does it mean?
Sure. So cash flow management is absolutely critical because you can be running what looks like on paper is a profitable business, and your cash flow is a mess. And what that might look like, and I'm not an accountant, but a lot of us can recognize it very simply, is that you see that you're earning a certain amount in your business, but when you go to your bank account and you're trying to write a check for something like taxes and payroll and the big ones, you're trying to understand, well, what happened to all this money that I know that I'm making? So I'm excited we're tackling this topic because it's a big one that we really need to have discussions to help people grow.
Yeah, and Tricia, is that what you're seeing with your clients as well? I mean, people, I've gone through that, Tricia, where you're thinking, I got $1 or $10,000 in, but you turn around, it's gone. Is this part of this cash flow management aspect, Tricia?
Yeah, I mean, I think a lot of people look at their bank accounts. I hear from every business owner, they look at their bank accounts basically every day. That is not typically the best way to manage your cash flow. In fact, you should be plotting out what money you expect to come in, what you expect to flow out. And just remember that you own the flow. You control the flow of that money coming in. It's all about timing. If you're a service-based business, you might have some unpaid invoices and you're waiting for cash to come in. That's not reflected in your bank account yet. And you might owe some things that's not reflected in your bank account. So it's best for you to work with someone to really predict or forecast what is the right time between when that money is going to flow in so you can decide on how you spend that money flowing out.
Tricia, do you hear that? Do you hear that? I hear the Black Enterprise Entrepreneur Summit attendees going, She said, don't check my bank account like I've been doing all this time. Let's dive into that a bit, Trisha. And then Maya, I want to turn to you. Trisha, what do you mean by that? Because, I'm assuming that we should look at our bank statements, or maybe there's a different way to do it. But when you say we shouldn't look at that all the time, as I do all the time, Trisha, help educate me. Why is that not the smart move? Or maybe better, what better should we be doing with that instead of that thing that many basic small business owners probably thought we should be doing or we're doing right?
I want to like shift that just a little bit. You should be looking at your bank account and your bank account
Of course.
statements, but it is not the only place you should be looking. That's what I mean.
I got it.
Right. You should be looking at. Hopefully, you have some sort of accounting software, Excel spreadsheet where you're tracking payments that are supposed to come in. If you have an e-commerce business, you're probably looking at your Shopify to see the timing of when that's going to hit your bank account. If you owe if you owe debt, if you owe credit cards, if you owe business loans, you should be looking at your business loan statements and your credit card statements to make sure you're paying on time. So there are multiple places to be looking because all of these things require cash. So in addition to looking at your bank account, you should be looking at all of these places and figuring out, when is that money going to come in, and when do I really have to access that money, and when is the money going to flow out?
Yeah, and Maya, is this what you're seeing as well? I mean, for me, I thought that if my bank statement and my financial accounting software is aligned and I'm paying myself, Maya, what's there to worry about? So let's dive into this a bit more. What are you seeing? What are you telling your clients? And feel free to add whatever you like on this aspect of, bank reconciliation, or things that those of us who are not financial experts as you all are, that we thought we were doing maybe right all the time.
Totally. Well, I think one of the first keys in all of this is to make sure that you have a good bookkeeping system in place.
Okay.
So whether you are working with an online system, whether you have hired a bookkeeper to support you with this, you should really be sitting down with your bookkeeper and with your accountant every quarter and going over exactly what Tricia talked about. So when are my bills coming in, and am I paying them in a way that makes sense? Is there a way that I need to be billing out a little bit quicker? One of the best things that I did when I first sat down with my accountant for these meetings was he taught me to bill faster. I would wait to try to send out the invoice to when it felt comfortable, like, oh, I know I've done the work now, I should get paid. And he's like, no, send it out faster, because that supports your payments, and that supports having more cash, right, in your account. So I think one of the big ones is make sure you're having quarterly meetings with the people who support you with your finances to analyze the patterns of what you're seeing going on, rather than dealing in the day-to-day and making decisions on the spot, because that, I think, it can be crippling. You're trying to juggle your business and also figure out these numbers.
Yeah, for sure.
So I want to add,
Go ahead, Tricia.
something to what Maya said, which is so beautiful. If you are particularly a service-based business, there is a way that you can control how quickly that money comes in. Really look at the terms of your invoices. Remind your clients, because they tend to forget. I mean, you're asking people to pay you. And especially at these times during the pandemic where cash flow is really important, maybe you can offer some discount if they pay a little quicker, or you can give them a payment plan option so you can get cash. The whole intention is to get cash in the door. On the expense side, I feel like almost everything is negotiable. Of course, you should pay for the value that you want. So if you're hiring a marketing specialist, or if you're hiring a lawyer, you need to pay people on time and what they're worth. But maybe you can control how quickly that money flows out of your bank account by negotiating everything. I think even phone bills, credit card payments, all of that, I feel like especially during this pandemic, during economic downturn, is negotiable in order to control that flow.
I love this. And as we always do at the Black Enterprise Entrepreneur Summit, I hope you all are tweeting out these nuggets and these gems. Already I'm seeing things like: 1, everything's negotiable; 2, discount; 3, you have your how you're giving clients a discount possibly if they're paying faster. Look at the terms. So many things that Maya and Tricia are doing here. And I hope everybody checks out their website. Again, I'm going to give that for those who may be just joining us: MayaHaridat.com and PowerHerFinancials.com. One thing you said, Maya, and I'll ask you this, and Tricia, to see your input: the difference between a bookkeeper and an accountant. Again, for you ladies who are ninjas, you'd be saying, Ramon, do people really ask that? But I think maybe there could be some people out there who are wondering, bookkeeper versus accountant. Why do I need both? Should I use both? Maya, how are you saying to use them? What are they? And then Tricia, I'd love your thoughts on that too.
Oh, 100%. Both are critical. right? So your bookkeeper is helping you with kind of the day-to-day expenses and the finances of the business. And so if, for example, you're a service-based business and you're out trying to work with your clients, you don't need to be spending hours, taping down receipts to fill out expense reports. You don't need to be spending hours trying to keep track of all of the expenses that you have coming with your business. So you either want to work with an online tool to be able to do this, or you want to work with, actually hiring someone to do this. I know within my business, mileage was always a big problem for me because I used to drive a lot of miles for my business. And the minute I switched over to using an online app, I mean, my bookkeeper finally smiled at me because finally my numbers were correct as to what my mileage was versus it was before. So I think having someone that can help you see the day to day, and then your accountant ideally should be helping you think about some of the bigger picture questions. Basically taking all of those numbers and putting them together, supporting you around what tax season looks like, and thinking in advance actually to tax season to help you understand from year to year, have you been able to increase your sales because you started spending more on your marketing, for example? Like those are the big picture questions that you want to sit down with an accountant. If you have a larger company, you want to get a CFO or a support team like that, but really thinking about those bigger pictures of, well, how do I actually grow my business? Because a lot of times the numbers can show you things that can really support you make those decisions a lot easier.
Wow, Tricia?
So I actually talk about this very often, and I have a blog. So my website for outsourced CFO services is artofmoneymatters.com. And I think that businesses have 5 stages of growth. You're in your startup phase, then you're in your survival phase. Then once you've gained some sales, you're in the stability phase, then a growth phase, and a maturity phase. And as you grow, you need additional professionals. When you start your business, you need a CPA absolutely to do the tax reporting and the tax planning. As you grow your business, you're wearing multiple hats. You might want to take off the finance hat, and maybe you don't even like managing the financials in the day-to-day. So you hire a bookkeeper to track the financial records, to categorize ins and outs. They may manage the payroll, but they're really doing financial record keeping. Once you get to a certain stage, you're in this growth stage, and you have questions like, what is the right pricing? How should I budget and forecast for the future? Do I have enough money to pay myself, or can I hire more people? When you're asking more strategic questions, that's when outsourced CFO comes in, because they think strategically about how you can manage and manipulate your numbers to do what you need to do, but also keeping profits and increasing profits and cash flow in mind. So you would add to your team CPA, then bookkeeper. Then once you get to a certain size, you have those 2 plus bringing in a CFO, and not at the full cost of a CFO. You might start off at a fraction of the cost. So get them part-time. I go into my clients once a month, typically, to check out what's going on. And then once they grow into the growth and the maturity phase of the business, now you hire a full-time CFO and you have a full stack accounting and financial operation. That's the way that I see the needs, and that's how I see them as different.
I love it. I think that's powerful. And I think what I'm hearing you say, Maya and Tricia, to a degree, let me know if I'm getting this wrong, and Tricia, you can answer this first, to the Black Enterprise ES audience, is that maybe we can divide ourselves to a degree. Is that those of us who may be just starting out, maybe smaller, we may have one need based on the maturity we're at, maybe just like a child growing up. On the other hand, you may have those in the BE audience that are growing, they're a bit more mature, they've been in business a while, maybe they're making more money, whatever the metrics are. They may have different financial needs, different expertise, different financial input they may need. Tricia, does that make sense what I'm hearing?
This is exactly the point, because a lot of people only start off and stick with the CPA. And we as bookkeepers or even outsourced CFOs are complements to your CPA once you get to a certain stage. So I remember when the PPP loans first came out, all of my CPA friends were bombarded with questions from their customers, when the customers could have also gone to these other finance professionals that could have supported them. So yes, you are correct in what you're saying. As you move along your stage in growth, you add to the team because you need different expertise, and everyone doesn't have all of the accounting and finance expertise.
Love it. Maya, I'm going to ask you a political question. Do you think you can handle that?
Let's go for it.
Okay, let's go. It's going to be a really political question. We're going to dive into politics right now. Here's the political question, Maya. Let's see if you can handle it. If my accountant is only talking to me once a year, if my accountant's only doing my taxes, If my accountant is not proactively in my business, should I fire them? Before you answer, think of that. You have accountants on weighted breath listening to what Maya's going to say. That is your political question.
So if you want me to answer that politically, which I can.
No, I'm just teasing. Meaning, if my accountant is not really actively, proactively helping me, like I'm hearing you all say, should they? I probably would look for someone else. That's kind of what I'm hearing, but I could be wrong. Does that sound?
Well, not only is it what you're hearing, but I would challenge that. I think it first starts with you. I
Okay.
think you as the individual business owner, I think the one thing that every entrepreneur can do, no matter how much they're earning right now, is you can think strategically about your business at whatever level that you're at, right? You may first just be starting and you still don't know what your break-even point is, which by the way is a big one you need to know for your cash flow. And you have no idea what that number is. But even at that level, you can start thinking strategically and making decisions about things and asking questions. So yes, if your accountant is only talking to you once a year, and then when you call your accountant in July, there's like an out of office sign and they're chilling somewhere living a good life, which they should, you may want to rethink things. But actually I would reflect it back to you as the entrepreneur in the first place, because it requires you speaking up. It requires you thinking about these questions, you doing some of the research, so that then when you're working with the accountant, everything is done in partnership. It shouldn't be the accountant's responsibility that you want their help to manage, of course, but you need to drive this and you need to be thinking about those bigger picture questions, which is, how do I want this company to grow? What are my options? And figuring out those things to really drive the conversation with the accountant.
Love it, which seems like a mindset for growth. Maya, I'm going to turn to you for this next question, where we talk about cash flow projections. That's something that I know may trip up people, and it may be hard to do in the few minutes we have left here. I want to get through a few more questions, but Maya, I'll turn this to you. Could you help give us a high-level point of view? What are cash flow projections? And as best you can verbalize it, how do we do that best? What's your guidance for us on that?
Sure. So the advice that I give, and again, this is something you have to work with a professional around, is that the cash flow projections is basically your cash coming in and your cash going out. Okay. And you sitting down and understanding what are the peaks and valleys that happen within your company. So after you've been running your business for a few years, there are probably going to be a few trends and a few patterns. There are going to be points when you probably have a lot of cash in, and then there are going to be points in your business where there's a lot of cash going out. And the trick is to try to find the balance between the two, so that, let's say, for example, one of the struggles that I had years ago was that I never plan for quarterly taxes, right? I started out as an employee, your taxes are taken out of your check, then you start a business, and you got this thing called quarterly taxes. What is this nonsense? What would always happen is those things were due at a time when I had little cash available. So then you're scrambling to try to figure out how to deal with that. So, there are always going to be expenses within a business, and your job is to figure out, well, how do I plan for those types of expenses that are going to come? So that, if, for example, right now you're in, you have a very big e-commerce, you're in the retail world, right? And you're focusing on e-commerce. You wanted to have planned your projections for your cash flow to get your inventory months ago. So that now you can take advantage of the holiday season, even in the middle of a COVID, even in the middle of the challenges we're dealing with. And if you haven't really sat down and looked at your numbers, sometimes it can be hard to then buy the things that you need or pay for the things that you need. So I highly recommend everyone sits down and looks at those numbers quarterly.
I think that's powerful. Tricia, if you wanted to add to this, you can, but I'm going to ask you the question first, and feel free to go back if you wish, but it could be related. This aspect of receivables and payables. Can you help us understand, is this related to what I just asked Maya, Tricia? What are you telling your clients? What should the small businesses be doing as we're looking at receivables, which is money coming in? I think you're the doctor, Tricia, and payables, money going out. Help us understand that, Tricia, in the context of what Maya just talked to us about cash flow projections, because in my opinion, they could be related.
So cash flow projections is one of the things that an outsourced CFO does on a regular basis. I've had clients where I do it on a weekly basis. I've had a client where daily cash flow management was super critical, because sometimes people just think that because they're generating sales and revenue, receivables, receiving money in, that is actually cash flow. Sometimes, especially if you have a service-based business, the cash is not coming in right away. You're waiting to receive it. That's the receivables part of it. And the payables could be, you have bills outstanding, but you're not able to pay it yet, but the cash has to go out of the door. So that cash flow projections is something that I always do, and I think it's a critical part of the business. There is a tool that I use, and actually I might probably make it available on my website if you go to part of moneymatters.com. I'll make it available to you guys, where I help business owners plot out on a weekly basis or on a monthly basis, what is the cash they predict to come in, and what is the cash they expect to go out, whether it's for operating their business or paying off credit card bills or paying off loans or paying themselves. You've got to factor yourself in that equation on payments. In fact, I feel like you should pay yourself first, but that's a whole conversation for another day. And then with that tool, you use it on a rolling basis, so you continue to look forward to see if you have a potential cash shortfall. So how wonderful would it be if you look forward and you see, like, 6 weeks from now, oh shoot, I might run out of cash. You're so much more equipped and prepared to take action today to prevent that from happening. So that is like the key and the jewel and the special sauce for using cash flow projections, and how important and critical it is for many businesses.
That's like the soy sauce of cash flow. I love it because I like soy sauce in my, my chicken fried rice, or pork fried rice. Maya, anything you want to add on this aspect of receivables and payables, which I think is important. We have money coming in, we want that. But as you all have said throughout this conversation, and I hope everyone, by the way, listening, we have a few minutes left, but I hope everybody is tweeting. If there's chat in the platform, I hope you're using the chat. I hope you're taking pictures. I hope you're sharing what these amazing ladies are sharing about the aspect of money, cash flow management. But Maya, back to you. Anything else you wanted to add? Because I do think it is important. We want to get the money coming in, but as Tricia kind of hinted, sometimes the client says we sign the deal, we get excited and start spending the money. We didn't get the money yet. So what are you hearing about that, Maya?
Totally. So I think, your receivables and your payables, like that's something that every entrepreneur needs to be looking at and paying their attention to. One of the things that I would challenge, it's indirect to finances, but I think it's a lot, we have to pay a lot of attention to it as entrepreneurs, is I think we have to pay attention to our own personal beliefs about money and our own personal habits about what we do in our personal life. So you gave that example of, we got the big sale and now we want to go out and spend money. I challenge you as an entrepreneur to really create awareness about what you do within your own personal life with money, because you're going to bring those habits, good or bad, which is going to directly affect what's going to happen to your receivables and your payables into your business. So if you know that you have tendencies where it's really easy to celebrate, for example, in that example, then you may need to create some structure and some controls around that for yourself. Great, maybe I celebrate and a percentage of that I'm able to now spend without a problem. But I think for a lot of us, we're often doing these things, we're getting these tips and these tools, and then we don't take ourselves and our patterns and our behaviors and how we think and process things into consideration. And as you grow the business, let's just call it what it is. That can become a hot mess when you start bringing larger teams on and they're trying to duplicate the structures that you have based upon your personal habits and how you operate. So I would caution people to just create awareness around it, so that way, as you start looking at your numbers, that you're aware of what your patterns are and can kind of find better ways to be able to help the business grow.
For sure. And Tricia,
can I take 30 seconds and add to that?
I was going to follow up and ask you, but go ahead, please.
Yes. Oh, beautiful. Along with what was like really triggered when Maya was speaking was people's personal mindset and how they handled their debt and bringing that into their business. Cash flow is a huge part of that. And you want to be very mindful of managing your credit, especially in a poor economic situation. So there's this balance of managing your credit with cash flow. And it's important to make sure you're paying things on time. And I am one who doesn't like to owe anyone money, and I usually pay off things on time. But if you really are like on a shoestring budget and you have to give every single dollar a job, at least pay the minimum or a bit more than the minimum on your credit card debt, but pay it on time. And that's a good way to keep yourself in proper credit standing, as well as managing your cash flow and giving each dollar a job responsibly and strategically.
Well, listen, Black enterprise audience, everybody should be tweeting that out right now. Give every dollar a job. Oh, I wish I had 4 more hours to dive into this. That is powerful. That is powerful, Tricia. Listen, we are dropping science in this panel. And I hope everybody's tweeting out and sharing this knowledge. Use the hashtag BEsummit. I'm on Twitter at Ramon Ray. Tag Black Enterprise as well. We have a few more minutes left, ladies, and I think this is going so well. Maya, I'll turn to you. What do we do? Well, Yeah, I'll finish this question first. What do we do, Maya, with a shortfall? Things are going along just fine. Things are humming along just great. And then due to whatever reason, which I couldn't even make the scenario because you're the expert of this, but we realize we're 2,000 short for some reason, 5,000 short, 25,000 short. Maya, what happens?
Oh, the scenario was, I mean, was this year, right? Like the scenario was like, you know, you wake up this year and all of a sudden 60% of your income, you know, you get the phone call in 1 week where everything is just, you know, it looks ugly.
That's right. That's
So
right.
we don't even have to go far to figure out the scenario. Even if you were doing things right, we all hit the scenario. You know, I think we've all shared some gems in here, and let me just highlight this particular one, you know, that Trisha's talking about, of like the 5 stages of growth you're in with your business. And to answer that question, this is a no-brainer to me. If you are working with someone like a Tricia for your business to help it grow, this is someone that wants to help your business grow. You should have a relationship with your financial professionals. You reach out. Very simple. The minute that you identify there's a problem, even if you don't have a solution for it, which sometimes you may not be the best person to figure out the solution, I would say just reach out and ask for help. Don't wait until it gets a bigger and bigger and bigger problem and try to hide it. And then you're really running into problems. So, you know, that first couple of weeks, I mean, I had coaching clients reaching out to me. I was doing the same thing. You know, I reached out to my accountant right away. Sorry, CPAs, but we were doing it, right? Because you need to create a plan immediately to figure out how to navigate the shortfall. And then if you've got to make tough decisions, better to give yourself that time frame to make those tough decisions rather than like delaying it where it becomes even more painful. So, I mean, we're approachable people. I would say, you know, just reach out, make the call. It's hard, but do it.
Yeah, Tricia, what's your short comment on that as we come to a close here? Not closing yet, but as we do, what's your brief comment on this aspect of you know, we find a hole, as Maya said, COVID's a good example of that, but I'm sure there's other times too. What are you telling your clients, Tricia?
So some of the tips that I shared in the beginning, one is get with your customers right away. Whoever owes you money, jump on that, give them discounts, give them potential payment plans, get the cash in the door, negotiate everything, see if there's any way for you to defer payments on any monies that are owed, and any way for them to waive any fees. The next thing I would say is tap into the cash that you have access to. If you have access to a line of credit, of course, apply for grants because that's a cheaper form of cash, but tap into lines of credit. Hopefully you have a great relationship with your banker. If you don't have a line of credit or a business loan, those are typically lower interest rate things. Make sure that your financial statements are prepared and girded up in order to prepare for that conversation with the banker, and also look to your assets internally. Some businesses have equipment, they have inventory, they have a lot of accounts receivable. I was working with an AV production company that had like $500,000 in accounts receivable. Sometimes funders allow you to leverage those assets as collateral against a loan.
Right.
So look at those different ways of accessing your capital. And then at the very end, you know, leverage your credit cards if you have access to your credit cards. But I wouldn't say this is the time to go to investors because that sort of portal is a little tighter and a little more difficult right now.
Yeah, this has just been a snippet of knowledge you've had from these two amazing ladies. We have a few more minutes to go, but Maya Haridat, definitely check her out at mayaharidat.com. Check her website out. Tweet her, by the way. Tag her in your tweets. Maya Haridat as well. Definitely, Tricia, remember to check out powerherfinancials.com. And Tricia on Twitter is Art Money Matters. And definitely feel free to check me out, ramonray.com, ramonray.com. Maya, what's one final really quick tip, anything that you've learned today or that you want to share with the Black Enterprise Entrepreneur Summit audience to benefit them? One final thing.
Totally. When you deals with money in your business, you cannot control the outcomes, but you can control the actions you take within your business. So if you are taking action, if you take these tips today, you take action on these tips, then you are favoring yourself to get better outcomes, but it's all about action when it comes to this work.
Powerful. Tricia?
My one-liner, you know this one, Ramon. Revenue is vanity, profit is sanity, but cash flow is reality. All of these companies coming in here, IPOing, blowing up, they are reporting sales. That's just revenue. That just lets people know that you're a big deal. But as long as you can get that revenue to trickle down into the profits, that's where a business owner really has sanity. But what we've been talking about here today is that cash flow. Cash flow is reality that keeps the lights on. That is the blood that drives the entire engine of the business. And so I'd love to talk about that more, but revenue is vanity, profit is sanity, cash flow is reality. And you want to connect with me, go to powerherfinancials.com, artofmoneymatters.com, Twitter, Art Money Matters. Art Money Matters.
You got
Thank you,
it.
Ramon.
Listen, ladies
There's
and
so
gentlemen,
many tags.
this,
So many
this,
going on.
this has been such an awesome discussion all about managing your cash flow. My name is Ramon Ray, founder of SmartHustle.com. And on behalf of Black Enterprise, please keep tweeting away using the hashtag BEsummit. But thank you so much for joining us and have a profitable day. Thanks to Trisha Tate and Haridat for their generosity and great insights. And props to Black Enterprise. Thank you for inviting me to moderate the session. It was a privilege. Right now, I'd like to turn the spotlight over to the participants of our next session. Money to Grow, Fund Your Dream, sponsored by Comcast. Latoya M. Smith is the CEO of Brass City Media, and she's here to lead an essential discussion focused on getting your venture financed and moving.